This is Justin Pulitzer. This is my weekend review video for Sunday, February 26, 2017. Ambitious program here to cover, so I'll just start plowing through it. I'll talk briefly macro. We'll get into the 7 market keys that I've sort of started to tack a little other addendums into. We'll talk about the major market indices, some of the momentum stocks that we all love to follow, and then I'll talk about some special case situations, either requests or things that I've seen of interest. Anyhow, for those wondering about the market, there is a improving economic backdrop. We've seen 2 basic barn burners out of the Philly Fed, and the economic conditions, growth in particular, seems to be accelerating, picking up. We have a couple of things potentially happening out of the new administration, the Trump administration, and it always amuses me to hear TV experts, TV pundits who got Brexit and Trump wrong the whole time and now all of a sudden seem to think they know what they're talking about, and they keep pontificating about his agenda being derailed. I don't believe that will be the case, but they like to talk nonetheless. So we're going to have tax reform, repeal and replace of Obamacare. So those are basically both tax cuts. You're going to have deregulation. The coal sector and the bank sector seem to be the primary beneficiaries of that. Repatriation, which is going to be good for companies that have a lot of cash overseas, and basically a backdrop of a pro-business and pro-growth administration as opposed to debt and dependency like we've had for the last 8 years. So where are we in terms of the markets here? The market has been up quite a bit. The VIX here is starting to make some higher lows, which I am mindful of. And we also seem to be picking up a little bit in the stochastic and in people buying options premium. So what does that mean? It means to me that you could have a confluence of a situation. One is people obviously making outright bets on the market directionally, either long or short. And when the VIX is elevated, that usually tends to mean put buying. It can also rally when you have excessive call buying as well. I will note that, but it tends to be a little bit more rare. The other alternative is people buying protection to hedge longer positions, and that is actually a very plausible scenario here. I'm watching to see here, however, how you had this kind of up move here, look above and fail, and then consolidation, and you've had some topping tails. So if you can take out this sort of 1286 area, and you can see we've had some past resistance here, really get into the 13s and take out these multiple days, then I think we may have kind of a pickup in IV, maybe even into the backside of this old uptrend line, which would be in the 15s. I don't really get too concerned with the VIX until you start getting multiple closes above the 200 MA. So right now I'm sort of cautious and more mindful of that type of a scenario. If you like, you could redraw this as a channel here and play it that way. You know, when you get to the upper part of the channel, sell some volatility, in the lower end you might want to buy it. But we are starting to make some higher lows, and I am mindful of this range. If we lose these days' lows and we start breaking, then we could come back down and maybe even retest some of these lows. But the risk in the IV, in my view, is either sideways to higher at the moment. The bonds. So you've had quite a large pullback in the bonds, and I was actually hoping for a retest of these lows, which would have coincided with the primary trend, which a lot of people, I believe, but not only beside myself, were watching based on what I can tell from, I don't know, the Twitter stream and so on and so forth. I have a lot of lines drawn in here. I realize it's a little, this was an old uptrend. There's an still older one lower, but we seem to be forming a new channel here. And as I've said for a while, as long as we're above this 119.21 and the 50 MA, I think the risk for bonds is a bounce, and I could see it even coming up to the channel high here potentially. That would be up basically close to the 124s, 125. So we'll see how that plays out. You do have a primary trend still higher, which would coincide with a gap fill. I'm not ruling that out. If there's some type of panic in the market, like fear of growth decelerating or Fed, maybe the Fed not hiking, right? That could cause a panic and a drop in rates and then a move higher. As far as that goes, though, I don't really see that being the case because the Fed isn't really expected to do very much anyway, right? The probability of a rate hike coming in the March meeting is only 26. It was up a little bit from the prior day, and my theory about what could happen with this is that as we get into the meeting, this starts to accelerate a little bit higher. Just because, like I say, it's sort of the I have the test tomorrow scenario where people realize that they have some exposure and maybe there's some Fed jawboning. So I wouldn't be surprised to see this accelerate a bit, but I think the Fed is a little bit worried about Frexit, Marie Le Pen, and maybe potentially Merkel not winning again, and there being more pronounced trouble in the Eurozone. I do think that the Euro project is coming to an end. And I think that is what's kept the dollar strong and the U.S. market strong, is that money flooding into the U.S. Because of the uncertainty over there. Anyhow, this looks like it could be forming some kind of a rounded bottom. And as long as we hold, like I said, pullbacks to the 50 MA and the trend, I think are likely viable for a move still higher. One thing I find encouraging that I think some of the Chicken Littles, the world is ending crowd don't seem to be paying attention to is high yield, and it is breaking out, right? It's rallying. You're making higher highs off higher lows until you start seeing something like this, and this was the oil crash. I think a lot of that risk that those balance sheet strapped companies, either they've gone out of business or they've refinanced or they've been able to lock in futures and forwards for oil and taken off a lot of that balance sheet risk. So until you really start seeing something like this, every day I hear, when there's a downtick in the stock market, everyone seems to think that it's, ready for the big one. The market's extended, it's got to have a huge correction. And every time the market has any downtick, my inbox is filled up regularly with downside projections and charts and Fibonacci retracements and range extensions and so on and so forth. I could keep going. But it seems to me that there's a lack of euphoria in the market, and that has been what's fueling the situation higher. As long as you have the high yield bonds in an uptrend or flat or not even down that much, it's hard to get any recession talk going. And the larger corrections that happen in the stock market, like 30% or more, tend to be based when you have a recession, which does not seem to be the case. Like I said, economic conditions seem to be improving. The aforementioned oil, there's a lot of talk about this being some type of a head and shoulders. I've explained that you need to build out and spend time like we did here, and that was failed and negated to the upside. You've had a couple of look below and fails, as well as a couple of look above and fails. My take on oil is that it's consolidating here. We did break a bit of a minor downtrend. It's had a couple of look aboves. The more this tests, though, to the upside, the more likely, it's sort of like if you bang on a door enough times, the more likely it is to open. So I think as long as oil kind of holds the 50 MA, it's going to be okay. If you were to lose these, this tail here, this 53.35 and really 53s, I've sort of extended that range down here a bit because we have had look below and fails that have not worked. So I'm kind of okay with oil at ping-ponging in a range. It seems to be getting close to 55 and backpedaling between 52s, sort of 50 high 51s to 52s. So until this range breaks definitively, I think it's just going to be ping-pong action. And I've said for a while that I think it's possible to see oil fill the gap to 56s and maybe at some point even get to 62s. You've had all of this huge increase in oil inventories, and it's odd that the oil hasn't broken. I think it could also be because the OPEC cuts are starting to kick in. And I believe the Saudis in particular are trying to keep oil high until they get through their Aramco IPO. So I think that the downside risk in oil might be mitigated at the very least until the Aramco IPO is done. Oddly enough, and I've said this for a while, that Exxon and like Chevron and so on and so forth tend to lead the show, right? It tends to lead the oil futures, and you've had these long protracted moves down before, and Exxon is in the throes of a longer protracted down move for a while now. We've had a trend break, and it's kind of in a new channel where there's some good news and there's some bad news with regard to ExxonMobil. The bad news is that it's been coming down, right? And we're through some past reference lows. The good news is that this kind of bottoming pattern usually looks a lot like a little bit what we're seeing now, and we're into some big Fibonacci levels. We're at the 50% Fib. This is also a big range distribution level, and the channel low is not that much not much lower, and you've had these multiple days down. You can see it's really bombed out in the stochastics. It's been bombed out in the fairly riding the low on the money flow. We didn't get a tick really below the line yet, but if there were to be some type of a flush, that could happen. If there is a breach of the channel, I think you could have a quick flush down to like the 61.8, which is around the 77, 78, but this area here, the fibs, are where I'm starting to kind of test the water long. I've been started recently to start selling some out of the money puts, and smaller size with the full awareness that this might not be the low and that we may have some type of a flush where I would start really getting into more serious size of a position. I often say don't add to losers, but when it's part of the initial plan, when you're sort of fishing for the bottom, I think it's okay when you're starting out small. If you're in full-size position, you wouldn't be looking to add any lower, but these areas to me are the areas to start selling those out of the money puts. I would be looking to add either, like I said, lower, closer to the channel low, or maybe even the 61.8, or back up over this recent high once 83s are really recaptured, and maybe looking to get out at a retest of the backside of the old uptrend line, which would be closer to the 86s. If 86s can get clear and hold, then I'd say that the character of the move has changed significantly. China seems to be a little all over the place. We've gotten close to the backside of the old up channel, which is where I said I'd be looking to book some profits into these reference highs. There was a gap down and hold. I think a lot of that had to do with Sina, which reported and was a big down move. Excuse me. You have a bit of an uptrend, so I wouldn't mind a 20 MA uptrend test for right or right out. It's sort of also like the range low. If that were to snap, it would be a GTFO, meaning get the F out, and look for a move back down into this moving average confluence down closer to 36s, where I would be more interested in maybe selling some puts short term. Speaking of Chinese stocks, I don't really want to get into Sina, but I will get into Baidu and Alibaba. So Baidu, I said, was going to be a go with if we could get over and sustain over the wedge, which we have not. That hasn't happened. So what now with Baidu? Let's keep it simple. We had a failure on the high. This was a bit of a look above and fail. So what that could mean is that we're going to rotate down to the lower end of the range here. So far, the 50 MA, this could be a stubborn move because, look, you have a 50, 100, and 200 MA confluence. So this area could lend some support if you're not already short from up here. I would be an interested buyer just because we came from the high down to the low down to here as the wedge narrows, and then maybe you get some kind of a throwback to there, but I either would be more interested and inclined to be long over the high of this breakdown bar, the 181.75 for a move back up, or play for a move down here, maybe some put ratios, buying some of these and selling 2 times out of the money. I wouldn't be surprised to see some type of a bounce because we held the 50, but this area to me is going to be really, really key. So I'm still really on hold until you either get a snap of the trend low or a snap of the channel high. I think, though, when you move up from the low to the high or from the high to the low, it's harder to break with conviction because you've already traveled so much. So the worst thing that could happen for the Baidu now is for this to like come down here, dribble along the low, and then snap. That to me would be super duper bearish. So I'm kind of there's an interim play there that I mentioned, and then there's like a more longer term one. Baba is still broke the trend and gapped, and it hasn't broken the range with conviction. So I think you could either set a buy stop up over this like 105.20 or a sell if you want to either if you're long or be short below, really basically below 100. I don't know how far that would go, but you probably would get the gap fill and a test of the trend and maybe like 50 MA, 100 MA confluence. That to me would be interesting. This to me just looks like it's waiting kind of for a range break. So I'm sort of on hold until that happens. IBB has rallied up. It seems to be pulling back here. You had a bit of a kind of a bottoming tail and then a move with a higher low. So let's keep it simple. I either like short below 286.16 for a move to the trend line, maybe even like these moving average confluence. If we were to get back up above this 290.90, which is the 2-day high, I think this will shoot up rather aggressively and be a long. So I'd either want short below the 2-day low or a move above the 2-day high in my view. One I've been playing long is this Gilead. I have some pretty good trade location on this bad boy. I discussed taking some profits here this day actually because we were back into the breakdown area. And I've left half the position on with a kind of a 10-day stop, which is held. So I'm still in half the position. And I like that it's coming back up. I'm sort of playing for that full gap fill, at least a 50 MA test. So once we get to the 50, I'll start probably playing with some stops, but I'm really looking for that full gap fill. If we were to lose the 10-day and this swing low here, 69.53, I would just stop out of the balance of the position and just say the second half just didn't work. It'd be a smaller gain. David Tepper is starting to, some of the big funds are starting to nibble into these stocks. TEVA in particular, this sort of was like a bit of a gap and crap the last few days. I wouldn't be surprised to see this do something like a restoration hardware move where it has like a multiple days down and then it just kind of like goes. We'll get into that in a bit. 50 MA here to me is the key, and this like pullback swing low. There's some moving average confluence here with the 20, which is upward bending. So if this area can hold, I'm cool with a right or right out trade. If you lose it and you start losing this low here, this 34.92, and the 20 MA, it's probably a GTFO. I don't know if I want to be short these things, but I'm kind of cautious with my long entry. Bristol Myers, Carl Icahn got into it, and that was this day. I actually was long, looking for the gap fill, and got filled into this spike near the trend. It subsequently pulled back, but it is rallying again. So I'm thinking this could maybe get up to 60. Maybe Carl marked the low. I'm cautious if we start losing the 50 MA, though. Look where the resistance was. Now we're over it, and look, we're starting to have closes over the trend line. So as long as it holds the 50 MA, I'm cool long. If it loses it, I probably don't want to be as long. Financials have gotten quite high. We're at the 1.618 fib of this range, and I use the spike low. So where are we potentially headed with these financials? It looks to me like the deregulation and the potential for the Fed rate increases this is probably going to be a long on a pullback. The issue I have is that it is run a lot. It looks like you had some poor highs here, and a liquidation break. So the 50 MA has been the hold point, and I'll say traders will do what works until it doesn't. On pullbacks, I'm fine with buying the 50 MA until it doesn't really hold or support. I'll keep it that simple. I think that JP Morgan is looking like it wants a hundo, but I don't know that it's not going to have a little pullback first. Let's discuss why that might happen, and it would be helpful if I could actually draw my fib levels correctly. This should be at 52.5, the famous Jamie Dimon bottom, right? That was something else. We're above that high, so I'm going to have to adjust the area to the upside, but I'll leave it now because this was really the key breakout point. Anything above 88.17 to me seems okay. You know, we broke out, it could retest and then fling up. I have a couple of channels drawn in here. This was the big one. This is sort of the big one, right? From this low going on higher. And then I've connected these tops. So it seems like we just got a little bit high, and I have a little bit of a smaller channel within the up channel. So I'm cool with buying this on the 50. Again, same kind of thing, 50 MA pullbacks. I don't know if this is a reordering of things, this gap. It doesn't seem like a big enough one, and it kind of went, let me zoom in here. It kind of went down and got bought. If we were to lose that low, that 89.73, I'm cool with a right or right out short for a retest into the 88s and maybe even into the 86s. But if you start clearing the 91s, this to me is going to be in launch mode and probably go a heck of a lot higher. So JPM, I like longer term. I'm short term a little bit cautious and still in buy the dips mode. If there were to be some like larger overall market correction, this could fill the gap and get to the range low. I did the 2x the range, this range. 93 is here being the higher end, and this 77.88 being the lower end, and also the backside of this consolidation funnel. I like where that coincides with the 2 times range, the gap fill, and the larger more interim channel here, and the bigger consolidation funnel. That area to me would be a screaming buy, maybe even an out-of-the-money put sale, and then I'd be targeting the fib levels as those strikes to sell. JPM is a really hard chase here. I don't know that I'd initiate new money longs into it, but I am interested in pullbacks. Bank America has now gotten past the 1.618 fib and kind of looks like a range doubling. The range doubling here would be 25.97. Like if you took this run here of 749 and just tacked it onto here. So we're getting kind of extended into that move. All of these, cancel that. I don't want to change any alerts. What's going on here? Always giving me a hard time. Let me do a little adjustment. It seems to have a problem with the setting here, some kind of snafu in the software maybe. All right. So this to me, I don't know. Like I said, I don't know if these gap downs were reorderings, because if we do have a rally in the bonds, that might not play so well with the financials. There could be a pullback. So this is sort of like a breakout. It wouldn't surprise me to see a retest. Again, all of them, the same business. As long as they hold the 50 MA, they're okay. Below to me gets a little more iffy. With regard to SPY, let's get into SPY terms. We're in overbought conditions. You can see here we've tested a few times. We're starting to pull back a little bit in that kind of an index. What was interesting to me is we've now kind of gotten to the 2 times the range area. You've come up a hell of a lot. Look at this. I mean, this was the channel low. We hit the channel high. It just pulled back mid-range and now is above the channel, and we're almost in a bit of a new channel. So even if this pulls back, as long as it... Listen, we got the 1.618 Fibonacci extension. It's interesting that this just kind of didn't turn around. Sometimes it doesn't right away. And I could see in overnight futures we've actually made a new high. So maybe the rally isn't over yet. Maybe it does have a little bit more to go. Usually rallies don't tend to end in overnight sessions. You have 1, 2, 3, 4 days of consolidation here. and a 10-day moving average. So I think as long as the 10-day holds, it's kind of going to be okay. And maybe we get a backside of the old consolidation funnel. That's usually a bounce point. I've said that I think the two scenarios that are likely is we're in a narrow window here where there could be a pullback. But if we do get a pullback, I think it'll be bought for end of quarter window dressing, and there'll be some type of a rally, a throwback. I don't know if we'll make a higher high or a lower high, but there definitely, in my opinion, would be some type of an end of quarter window dressing rally. If we do just go to the moon here, there could be end of quarter lock-in, which could lead to a larger summer correction. So those are the two scenarios I'm watching. Short term, we had an attempted sell-off Thursday that was rejected, and like a $10 gap down on Friday, which wound up being a Maribozo candle, meaning it opened on the low and closed on the high. I'll show you in futures terms what this looked like. This to me was interesting, and I tweeted out and you can see here, this is the higher high, right? When futures open, they've been selling off here, but we did make a higher high, which is important. Take a look here. You had a close down. Overnight inventory was basically 100% net short, right? This was the close on Thursday, and it's just kind of sold off, and then came down. Look at this. You have a hammer low at reference areas that I drew in, and then we opened up and didn't take that out, and in fact, you rallied. So I think that this was a tell. Once you got over this bar here, it did it a little bit pre-market, and then this just continued up. It was really choppy for the afternoon, but I had tweeted out that I said if I was short this day, and I wasn't, I think I'd be tearing my hair out, because it's like you had the big gap down right, and then you just rallied and like soared into the close. So obviously this is just this was short covering rally into the end of the day, and you had a rich close, you had a VWAP down here closer to the 57s. Would not surprise me to see this, like if there's early weakness on Monday where this gets kind of thrown back into like this sort of chop range. But when you see something like this, when you see a pre-market low that can't be taken regular trading hours or sustained regular trading hours, it's clear to me that it's likely going to go higher. And now the fact that we have a higher high in the overnight, an all-time high, it seems like this may not stand. We may open up on Monday, and if there's some type of an early rally that doesn't take the overnight high, there could be a larger liquidation break first before it's repaired. If this is taken in the early morning, maybe you just want to kind of step back. Now, my view is if you start losing these, like here you had tweezers, and if you start losing these kind of like reference lows and you get below the bulk of this consolidation and below the Friday rally low, then I think we could have some type of a move lower still. Maybe there's a larger liquidation break down into a lower reference low. So that's really what I'm watching. I'm watching these kind of this Thursday low and then this pre-market Friday low. Like I said, I do expect there to be some type of a little bit of a pullback here because we kind of closed rich, but it seems to me like there's potentially some highs ahead. For a short trade, if you were to lose these 2-day lows, like I just said in the futures, like the bulls kind of rallied it back up and then rallied it up again. You have the kind of the 2 days of rescue rangers, if you will. If the rescue rangers here were to lose their lows, the 35.41, for example, I would think that there would be more sellers. Like this would attract sellers to not only to the gap fill, but potentially the backside of the channel, and maybe even this channel if the selling really kind of picked up. I do at some point think that we're going to get a retest of the breakout, which would be healthy, frankly. That doesn't constitute a bear market. Breaking out and then retesting the breakout is actually quite normal. So that's what I'm kind of watching, this 2-day range. Above the highs could continue to extend us still further. Below the lows, I think we'd get a pullback maybe at the least to this backside of the old consolidation channel, where I'd be expecting some type of a relief rally bounce. And if it does really start picking up, maybe to the 20 MA. The 50 MA, in my view, was the real resistance We haven't tested it once since the breakout. At some point, this is going to get tested, and I think the first go-round would likely be a buy. I like that it's also coming up to the trend low from this move. So that, to me, if we could get a confluence of those events, I think would be an interesting spot. The expected move this week is $2.39, so that would be up to $239.13 or down to $234.35. Again, with the VIX being as low, I would expect a downward move to potentially have more juice in it. IWM showing a little bit of weakness on a relative basis, but not really. I mean, like, not alarmingly so, right? We had kind of a low here, and then this low actually eclipsed here, but it held the 20 MA and bounced. I didn't redraw the upper fib level, but to me, as long as we're below 138.82, it's a little iffy. If we were to clear this high, this like 140.01, I think that this could really get going to the upside, maybe to the upper part of the channel. So, and these aren't really like excess highs, they're kind of poor. So it seems to me that this could have some room if we get over that high of day. Below the 2-day low, I think at the very least a 50, and maybe even the channel low and the backside of the old kind of consolidation down funnel. So that would be down closer to the 134s, 135s. Expected move this week is $2.32. So 140.97 or down to 136.33. But like I said, the down move could be larger because the VIX would be popping. The Qs. This is pretty extended. We're above the channel. It's holding the 10-day here. If you do a 1.618 fib of a larger range, including this kind of flash crash low, I did it two ways, this range and then that range. We're getting kind of close to that level. So if there is still a further up move to go, it may be getting a little bit long in the tooth. I would not be surprised to see this have some type of a pullback. Again, 50 MAs to me would be places to either cover shorts or to buy, and we're kind of a long way away from that. So shorter term, 2-day range is a key. If we were to lose the Friday low, I'd probably play short to the very least the 20, cover some, see how that goes. If we lose the 20, then maybe it does still come down further. One of the keys that I'd be looking for, though, with the Qs, the expected move this week is only $1.48, so 131.74 to the upside, 128.78 to the downside. Again, downside could potentially articulate lower if VIX pops. One of the things that has me a little concerned, and if you kind of know how Apple trades, look at this. We just took out the high here, but we came up from the bottom, right? So it's a lot. This was the 2x of the range. This was a look above the range high. I wouldn't be surprised to see some type of a pullback in Apple, at least to retest the kind of the channel. Very overbought conditions. You can see we've pinged above here multiple times. This is like buried in the upper stochastics. This is starting to make a bit of a lower high. I can't say that I don't know that Apple. I can't say that Apple won't go higher. There's an old downtrend. An older channel here that it had broken closer to 146. Like if you were to clear these highs, this probably could just keep on chugging, right? But if we were to lose this and come back down, I would be thinking we could at least see the 130, kind of like the breakout high here, or the 130.49. At maybe the very least, the 20 MA potentially. That was where this held, so I would be targeting a 20 MA. It's been pretty bullish, but I am a little concerned that we did come up from the bottom. It's above the channel, and it's above the reference high. So I do like the idea of booking a little bit of profits in Apple, and I've noticed the last couple of days that Apple has underperformed the market a little bit. So Apple was the leader on the way up. I can't say that it won't be the leader on the way down. If we start seeing days where the market's up or the days that the market's down but Apple's down even more, then it's, maybe a little bit of time to go. I do believe that Apple is destined for higher, but a couple of things have me concerned. These quarters that are coming up until the fourth quarter and the end of the year, they aren't going to be I don't think there's going to be anything special in them. There's a lot of hype for the iPhone 8, and I do think it's going to be great. I can't wait to get it myself. But it seems to me that it may have to suck wind for a couple of quarters in that time period, particularly the summer. So I am a little cautious with Apple here. It might be something to start booking some profits in and revisit a little later in the year. Microsoft made a high. This was the kind of the exhaustion gap above the upper channel. Pulled back here and now has a bit of a lower high in play and just kind of consolidating. The 50 MA has been key, so I can't say it's a short until you kind of lose a 50 MA. But if you were to lose this 62.75, which was the last swing low from a lower high, then I think you could start maybe shorting the rallies in this, and this could maybe have a bit of a pullback. As of now, it's kind of just riding the channel high. If you want to be aggressive, you could short with a buy stop over 65.24, which was this last swing high. So that would be kind of like a right or right out short, and I'd be more interested in adding on a break of the 50 and then really a break of the 62.75. But Microsoft just looks kind of like it's in consolidation mode, probably waiting for more of a directional move from the market. This Amazon is interesting to me. Why is it interesting? It's interesting for a few reasons. One is that you had a breakout and now we're back below the breakout. So this 3 days here spent above the high is technically, and basically at the channel high, is technically a look above and fail. Not that was met with tons of sellers here. You could see we have a bit of a bottoming tail. So there's two ways to play this, in my opinion. One is if we get back up above 847.21, this will have then been a look below and fail, and this probably will really get jiggy to the upside. If we were to lose this hammer low here of the 837.75, I would think it could be a right or right out short for an entry. See how it handles the 20, because that's where this broke out from. Is really as long as the 20 holds, I don't think it's in too much danger, but I'm just talking about immediate trade setups, and we do have trend here. So this is drawn a little funky, but maybe we'll redraw that quickly from here. There we go. I like that better. Do like to be precise. So what I would be looking to do would be to short below the low here. First of all, long above the high and long above this 847.21 for right or right out long. If we lose the low, I'd be short. I'd look to see how it handles the 20. If it really bounces hard off the 20, I'd probably cover. If it knifes through the 20 and loses the trend, I'd probably be looking to add to the short for sure on bounces and maybe consider potentially down to the lower end of the range. Remember, this is where it held the last time. Look where this bounce held the last time. The 50 MA is down there. So this would have been, to me, a look above range that failed, and we'd probably rotate down to the lower end of the range. So those are two right or right out short, right or right out long or right or right out short setups. Facebook, I want to get bullish on Facebook again, but I'm having a little bit of reservations. One is because we had this big move up, and it kind of is just floundering, right? It didn't have any follow through. This was above the earnings high and above this last swing high. This really should have stuck, right, and went higher, and we're still failing on the backside of the old uptrend line. So two right or right out trades. One would be below the 2-day low, a right or right out short with an add below 133.46. And that would be basically where the 20 MA is. We'd have to see how that handles itself, if it's a kind of a look below and fail back into range. But if there's a look below and acceptance below this day's range, this whole day to me would be a look above and fail. And I think we would articulate back down to the lower end of the range, maybe to the old reference high and like 50 MA. Anything above these 2-day highs, I think you could take a right or right out long and then add again above the high, and we would be maybe talking about the old progression line up higher around the 145s, potentially closer to 150. So that's my right or right out plays on the Facebook. The Netflix is just in a, I could see we're above this sort of breakout channel high. It's been holding, right? It's been riding it, and we have another kind of channel that trend that I've drawn from the gap highs. As long as this holds, it's still okay. This to me seems like just like a consolidation play. Any snap of that, I think, would put the gap fill and 50 MA likely into play. So that's kind of what I'm thinking. You could either buy stop it over 145.95 or look to maybe short below this swing low here of 140.05. So basically below 140 would be a right or right out entry for that stock. Google, still in the channel, riding the backside of the old uptrend line. So this to me is key. You have, let me zoom in, two hammers. So what I would be looking for is a breach of the low of 842.50 as a right or right out short entry, because again, the rescue ranger play, you've had these gap downs that were bought. Below those lows, I think there'd be a pullback at least to the 50 MA, maybe even further. Above the highs, probably continues to float up to the old all-time highs. So that's a couple of right or right out plays in the Google. NVIDIA. So I warned about this, that if we rallied hard into the, again, back into the earnings, the risk could be to the downside. So you've now had a look above the range that failed, which of course takes you to the lower end of the range, and you've now had a lower end of the range that failed and moved up. I think this kind of was saved, believe it or not, by OPEX. Often OPEX is a big problem for the long side, but it was a problem for the short side in this instance, and it was able to kind of pin and close above 100. Let's keep it real simple. We now had a look below. If you get above this high on Monday, the 102s, I think you'd at least have a throwback to the 50 MA. If you lose this low of 95.70, I think we could get a move to the kind of the consolidation funnel, which would be these reference lows here down in the 90s. And what I'd be looking to do there is likely sell some out of the money puts. Short term for a bounce, maybe as far away as close to this old gap fill, small size, and then I'd be looking to kind of add to it down near these fibs, gap fill and fibs. So I'd be looking to sell puts that are near the gap fill or below the gap fill. A break of this low, though, I do think would be a right or right out short, because look, we technically, when you take out a swing low, we didn't close below there, I will note that. But any time, in my view, spent below this 99.11, which is the swing low between the double top, makes the double top more likely, and there could be continuing falling. So in my view, 99.11 is the kind of the must hold here. It's also roughly halfway of this bar, and it would be below this low, 99.68. So 99s, let's keep it simple. If it holds 99s, kind of Herman Cain style, we're okay. Anything below there to me is still vulnerable. Tesla. By the way, longer term, I'm kind of bullish on NVIDIA. I just think it ran a lot, and it may need a little bit of a corrective phase. So similar kind of thing in Tesla. You've had these really big epic runs. We know that has to be a capital raise. I think Musk mentioned that there would be one. So this may be a little bit under pressure until then. That being said, this was a breakout and now is just a check back to the backside of the old downtrend line. So you have these reference lows here around 247. The 50 MA is around the 240.81. So somewhere in here, I wouldn't be surprised to see it catch a bid for a bounce. What concerns me is that this was a gap and go below the trend line. I would be targeting, where I'd really be looking to buy this is into a fib. Really, the 200 MA was the big key, and I love that that's close to the 61.8. I'd be all over that for a right or right out buy as a, you could see here it was the resistance, it should be the support. If you want to start playing this, you could sell puts roughly around the 221 area or whatever this will be, the 221 or below. I think that area would be good support. You could even start at like the 50 MA or at this retest of the 240. I don't think this is just going to be a straight shot down. I think there's going to be some chop. We'll have to see how that plays out. But I will say this, anything below 265 in my view is vulnerable. If we were to get back up above 265, then I think that this would be considered like a successful retest of the backside, like a bounce off, and then this could continue significantly higher. So I'm either looking to buy closer to the fibs via short out of the money puts, or play back up over 265 long. Then I think we would be kind of back off to the races. One I often talk about, I don't talk about a lot on the videos, but I do talk about, I do talk about on Twitter is PayPal. This is one of my favorite stocks to buy in a dip. And I've mentioned that I thought that this was under accumulation based on the way it's been trading, and then it kind of got this big pop. So we are technically into some sort of resistance. Anything above this line has been a little unsustainable, and we're right to it. But I like that we're above this sort of trading area here multiple days. I'm still down to be a buyer on dips. I think that this thing longer term is destined for significantly higher. And if you're looking for a stock in the future that has the potential to be a buyout target, I am 100% DTF, for those in the know, to say that this is one that would be to consider as a potential takeout target in the past. Look at this. We're above the downtrend line. You've had like the successful check back. This was sort of like an outside day. I like buying this on any pullback, selling out of the money puts that are 40 or below. That's sort of the Chicken Little way to play it and the way I like it. Intuit, not one I really talk about very often, but this is a big league stock, right? Majorly bullish. A couple of things, though, that I'm a little concerned about here is that if you do a 1.618 fib extension of this range, we're there. If you draw a channel with this as the high connector, we're there. If you use this high, it's just got a little bit more to go. So I'd probably be interested in a pullback in this stock. I don't know if I'd be looking to really chase it to first with new money longs here. I mean, technically this is a professional gap, but my concern is the fib extension and the kind of the channel high there. If you were to look at it another way, and I have talked about the 2 times the range type of scenarios, that would be, hold on, let me just do a quick calculation here. 79.63. That's a $29.58 range here. And if you were to tack that on to 109.21, that would be higher. There'd be another $10 higher to 138.79. So I think somewhere here in the next $10, you're looking to kind of skedaddle. You know, you're looking to get out of it. That's just my view. Let me put in draw that level in quickly so that we can address it maybe if we got there. 79. So 2x range. And we'll make it red. Naughty red. So if this is to just fully blow off, I think you're kind of in the last $10 of the move. So I am a buyer on dips. If there is some pullback mid-channel to like this breakout here, I'd be down to sell out of the money puts. Something closer to the breakout of the 109. So like if this were to pull back to the 50 MA or something at some point, I'd be looking to sell out of the money puts. But right now I do think it's sort of in the last throes of the range move higher. Restoration Hardware, this was a professional gap. I have a kind of a crazy history with this stock. So I bought it over the 2-day high here. This was the Buckingham downgrade, and they still had a $20 higher price target on it, and that to me seemed a little cray-cray. And I talked about doubling my position over that high, which I did here. And then you had this gap, which was on an upgrade. I forget what firm upgraded it. After that, you had these multiple days of selling, and it came down and down and down. And I was... the truth is I know this is crazy. I didn't realize this was the earnings day, which is really rather sloppy on my my part. I should have known that. But we got back into the range here, and I had really great trade location on these, and I was sort of thinking buy right and sit tight. And after multiple days down like this, it just didn't seem to me. The character of the buying in here seemed a little bit better to me, and then this kind of was a bit of a head fake, but I was still in the position, and then this was a professional gap and go on the earnings. I talked about taking profits around the 28s, and then again around the 200 MA, and then this thing just really just blew out. I wound up selling puts also on this day, close to down closer to the gap fill, and I was fortunate enough to sell them early, and they got really mauled. I mean, absolutely mauled on this move. So look at this. The 200 MA was the key. I'm kind of fine with this on pullbacks as long as it holds like 30s. Yeah, these lows here, you really shouldn't revisit past like the 30-21 area. I would be a little leery about this. I like that this was a gap and go above the 50 MA. Anything above this, I think that this is looking to test the start of the gap, and because we came up so far so fast, it may even look in, but I don't think it's going to fill right away. I think there will be opportunities to buy this on a pullback, but I think that the fact that we're above this 28.97 on the gap and go, a professional gap, like think about it. Anyone who shorted on these days, 1, 2, 3, 4, 5 days, even 6, if people shorted this day, they're all wrong. I mean, the price is way above there in a very short order. And this was, look, a gap and go above the downtrend. This to me is very telling. They have a buyback. They had better than expected EPS. So I am a put seller or a buyer of RH on pullbacks from here on in. Home Depot, speaking of stocks like that, I keep getting asked to discuss this. So what's the dealio on the Home Depot? So, wow, boy. All right, listen, I'm trying, right? Trying to make it a little interesting. So Home Depot is up from the channel low, coming to the channel high here. And I've done a couple of things. One is I did a measured move, which is annoying because it's covering my measured move. Edit properties, measured move, 147.40. So we're getting kind of close to the measured move high and the channel high, right? So I'm probably looking to book some profit. I'd be looking to book some profits in Home Depot on moves higher. I do think that there will be opportunities to buy the dip lower, but as far as my measured move goes, I forget where I measured it from. Maybe it's like this projected up. I think it's probably getting close to where you might want to start looking to book profits. At the very least, stops. I'd probably use a move below 144.51 here as a stop on the long, and maybe even a right out short entry for at least a pullback into this kind of progression line. I drew in some fib levels based on this day, but I'd be down to buy this at a fib, like a 50% fib, which is kind of where this rally started from and like where the 200 and 100 live. I don't know that you're going to get that so quickly, but I do think it's getting a little late in the Home Depot trade. Listen, this thing could fully blow off, but if it is going to respect the channel, we're getting close to the measured move and the channel high. So any more up moves, I'd probably be looking to kind of buy the dip. One that has been an absolute piece of crap stock is this ZOES. You're at an all-time low. However, if this continues lower still, we're getting close to a channel low where I would be interested in a right or right out trade closer to like $16, I guess, 15, 16. I'd probably either sell out of the money puts there or just try the stock for a bounce. Quest Diagnostics, not one I talk about very often, but one I've been really waiting for a larger pullback to happen, and the pullback has just not come. So what am I thinking with Quest? If you $27.19 run, this move here, not including this like takeout rumor, was 27.87. I call that more the organic run as opposed to the news-driven run. if you project that up from these lows, that would take you close to that would take you to 106.47. That's with a 27.19. It could be 27 or so, give or take. If you do a 1.618 fib extension from the news-driven spike to the low, that takes you up to 107. So I think that this could have another $10 in the tank. And it would be interesting if it coincided, like if it came up here and just dribbled up to the channel high, then I'd be interested in a pullback play. But Quest looks pretty bullish. It's buy the dip type of stock. Something interesting. A lot of these like safety plays, I think a lot of people are getting nervous. Why are these stocks rallying? These aren't the kind of stocks you want to see rallying if you're seeing growth accelerating. These are the kind of stocks you want to see in a recession. But I think what's happening is the fact that the Fed doesn't seem likely to hike in the next meeting. People are chasing yield again, and that this could come up. What I would be interested with J&J is look at this old uptrend line and look where it would terminate. It would be above the high of the last move. What I would love to see is for this to come up in like a really straight fashion. Everyone will get bullish because it broke out, but they won't realize that it's the backside of the old uptrend line, and that's when I want to lay into this thing short. So that's what I'm thinking with this J&J, that it's short-term, probably bullish and going higher. And there could be pullbacks or whatever, but I do think it's going to retest this high and likely break out. Everyone will be hopped up, and they won't realize where they're buying, and they'll get their you-know-what slammed in the locker. Same kind of thing with Clorox, although this is a little bit more bullish. This was a head and shoulders a breakdown, and now you're back up over it. I don't know that this is going to be this is also getting quite extended. But Clorox to me looks like it could be a buy the dip on the 200 MA again. Look where this has held all these supports. It's now back above it. That's really where this breakdown took place. Any retest of the 200 MA, I am down to try Clorox on a pullback. Same kind of thing with this Kimberly-Clark. This roughly held the channel low. I was actually watching this a while back. I was hoping it would come down to these reference lows. And it looked like it was doing that, right? It was riding this. No such luck. Just gapped and kind of went. You have double tops here. There's really no such thing as triple tops, but I do think that it would get there and it wouldn't go through so easily. There'd be pullback. So 200 MA maybe would be an interesting area to kind of buy the dip. I think my favorite of those though would be Clorox. If you look at this on like a longer time horizon, I'll just take it to the max, the monthly. Look where this is kind of held. I mean, you had this like big kind of kicking pattern. So I think any pullback really to this like 125s area, maybe even 123s, will likely be an area for a right or right out by the dip. I'd probably be looking to sell, I don't know what the juice would be, but 50, the monthly, the 50-month premium. This could continue up higher, but like I said, my favorite of those, pattern-wise, predictability-wise, is the Clorox. And I'm going to end on this Fitbit. I hated this effing stock. I remember arguing with people when this thing was in the high to mid-40s, and everyone was telling me what a schmo I was, and I told them that I would see them in single digits. I projected this would see 5, 6s. Now that we're here, I'm actually long. I love that Kramer threw in the towel the other day on this stock right at the lows after he had loved it much higher. I actually like Kramer, so I don't want to give him a hard time. He's always been very nice to me, so we're cool. But I do like that some staunch bulls who were in the stock have now kind of given up, and I like that you have these double, kind of a higher low and two bottoming tail hammers, and it didn't go down on bad earnings, right? This thing reported, and it was crappy, and it went down, but it was met with buyers. So I'm long. I'm still going to stay long. I think that this may want to come up and see the downtrend and maybe the 50 MA. That would be nice, right? If you lose these lows, it's just a quick stop out below like 575 or 572, whichever one you want to use. But I mean, you might even give it the all-time low. I mean, you're not really talking about much. I mean, the stock's in the 6s. I mean, maybe even give it a full point, you know? I mean, percentage-wise, I know it's a lot, but I mean, if this stock were to really run, I mean, and this thing could, believe it or not, get a bid. This thing could double. I mean, the stock could easily double. So I'm kind of cool with this. Look where the 20 MA was, all this resistance, and now we're kind of banging it. Now we closed above it. So I'm cool with it. If you want to be really, really conservative, just use the bodies of the day. Really, any closes below the 10-day and this body here, which is just below 6, you could use that as a stop out. But I'm sort of digging fit here, believe it or not. Anyway, we're over an hour. If you're not following me on Twitter, my handle is @JustinPulitzer. Be sure to like this video, leave me some comments, help me help you make the videos better. If you like my video, please favorite it and retweet it on the Twitter. Much appreciated. Have a great trading week. I'll see you. I'm debating if I'm going to do Periscope or that YouTube live again. I did realize now that Periscope has the ability to save in HD, which I've never tried before. I might try that this week. And it, by the way, also has the ability to do landscape, so we might try one more that way, or maybe I'll start alternating. But the thing I do like about the YouTube is that there's no wait time. It posts right to YouTube and can be played. There's just not that mobile aspect, so it sort of forces people to watch it either through the YouTube. I guess there is. I mean, if you download the YouTube app, you could see it, and if you hit the little plus button on my YouTube page and subscribe, you got notifications when it's posted. By the way, if you're not subscribed to my YouTube channel, do that now. Either create an account or just subscribe. You'll get notifications. You could push for when I put up new videos. Anyway, let's have a great trading week, and cheers.